So for introduction, I'm going to present about the background of study. Gold is one of the most popular investment assets in Malaysia. Its prices are influenced by factors such as economic condition, inflation, exchange rates and market demand, causing continuous price changes. Therefore, understanding gold price trends is important for investors and financial decision making. Gold prices fluctuate continuously, making them difficult to predict. It is also challenging to determine whether these price movements occur randomly or follow a specific trend. Therefore, an appropriate statistical method is needed, especially when the data may not satisfy normality assumptions, making non-parametric methods suitable for this analysis. So there are four objectives. First, to identify the trend of 1 gram gold price in Malaysia over the selected 30-day period. Second objective is to determine whether the daily movement of 1 gram gold prices occurs randomly using the run test. The third objective is to determine the association between the time periods pandemic versus current periods and 1 gram gold price levels using the chi-square test of independence. And last objective is to compare the 1 gram gold prices between two different time periods, pandemic versus current period, using the man weight in you test.
Assalamualaikum and good morning everyone. Next, I will explain the methodology used in our study. The dataset for this study were collected from harga.mas.my, which provide relevant and update gold price information in Malaysia. We used two datasets in this study. The first dataset consists of the current daily price of 1 gram gold 999 collected over a 30-day period from 20 May until 80 June 2026. The second dataset consists of historical gold price during the COVID-19 pandemic from 20 May until 80 June 2020. This dataset was used to compare the gold price between the pandemic and the current period using the chi-square test of independence and the Man-Wajni-U test. Okay, for the next slide is data type and software. This study used quantitative time series data where the gold price were recorded according to the observation date. For the software, we used Microsoft Excel and Jamovi. Microsoft Excel was used to organize the data, calculate the descriptive statistic, construct the line graph, and perform the run test. Meanwhile, for Jamovi was used to perform the chi-square test of independence and the Man-Wajni-U test because it provides efficient tool for non-parametric statistical analysis. So, to achieve our research objective, we apply four statistical methods. First, descriptive statistic were used to identify the trend of 1 gram gold price in Malaysia. Second is the run test was used to determine whether the daily movement of gold price occur randomly. Third, the chi-square test of independence was conducted to determine whether there is an association between the time period and the gold price level. And finally, the Man-Wajni-U test was used to compare the gold price between the pandemic period and the current period. So that's all for the methodology section. Thank you.
For my part of the presentation, I will be covering the descriptive statistics and the runs test results. As you can see in the table on my slide, we summarize the basic numbers for the 30 days of gold data. So our calculated average price comes out to RM 569.45 and exact middle price, the median, is RM 573.42. If you look closely at our highest and lowest points here, the price peaked at RM 582.36, but eventually fell to a low of RM 534.18. Then, just by looking at these numbers on the slide, it is easy to see that gold prices generally move downward over the course of the month. Now, moving on to my next slide for objective 2, where we look at whether this price changes happen purely by random luck or follow a pattern. Our null hypothesis listed right here assumes the market is random. To test this, we use our median price as a dividing line, which splits our data perfectly into 15 days above the line and 15 days below it. Then, if the market was moving completely at random, the prices should cross back and forth over the line about 16 times. But as you can see from our actual Excel results, it only crossed 6 times. Because 6 is a lot lower than 16, our final math score is negative 3.716. Since this falls way past our safety limit of negative 1.96, we can officially reject the idea of randomness. This proves that gold prices do not move randomly. Instead, high prices tend to stick with high prices, low prices stay with low prices in steady box. Thank you. I will now pass it over to the next presenter.
For the third objective, we use the chi-square test of independence to determine whether there is a relationship between the time period and the level of gold price. The test results show that a chi-square value of 60.0 with a p-value less than 0.01. Since the p-value is lower than 0.05, we reject the null hypothesis. Therefore, we conclude that there are a significant association between the time period and the level of gold price. This means that gold price level differ significantly across the two time periods. Next, we use the Man-Wajni-U test to compare the 1 gram gold price during the pandemic and the current pandemics. The result shows U equals to 0 and Z equals to negative 6.75 and the p-value less than 0.001. Since the p-value is 0.05, we reject the null hypothesis. This means the current gold are significantly higher than the during pandemic.
Based on the descriptive statistic, the average price of 1 gram gold 999 in Malaysia was RM 569.45 cent, while the median price was RM 573.42 cent, indicating a fairly balanced distribution. The standard deviation of RM 11.77 cent and interquartile range of RM 16.46 cent show moderate price fluctuation. The gold prices range from RM 534.80 cent to RM 582.36 cent during the 30-day observation period, indicating noticeable changes over time. So for the run test was conducted to determine whether the gold price movement were random. There were 15 observations above and 15 observations below the median, with 6 observed runs compared to 16 expected runs. The test produced a z-value of negative 3.72 and a p-value of 0.001992, which is less than 0.05. Therefore, the null hypothesis was rejected, indicating that the gold price movements were not random and followed a systematic pattern. The chi-square test was conducted to compare gold prices during the pandemic period and the current period. The test produced a chi-square value of 16.00 with a p-value less than 0.001. Since the calculated value exceeded the critical value of 3.841, the null hypothesis was rejected. This indicates a significant difference between the two periods, with gold prices being higher in the current period. The Mann-Whitney U test was conducted to compare the distribution of gold prices between the pandemic and current periods. The test produced a U value of 0 and a Z value of negative 6.65. Since the calculated Z value was less than negative 1.96, the null hypothesis was rejected. This result indicates that gold prices in the current period were significantly higher than those during the pandemic period. So in conclusion, the analysis showed that gold prices experienced noticeable fluctuation and followed a non-random pattern. Both the chi-square test and also the Mann-Whitney U test confirmed that gold prices in the current period are significantly higher than those recorded during the pandemic period.